Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Jeffrey Cleveland joins us here. He's the chief economist at Payton and Regal. He's out there in L.A. I have no idea where he is today. Hey, Jeffrey, talk to us about inflation. What are you feeling about inflation these days? Is it whipped? Is it under control? Do we have to be concerned about it? What did the CPI data tell you today?
Well, hi, Paul. First of all, coming to you from London.
Nice.
That is the
have a pint on
Bank
me.
of England in the background. So, yeah, a little bit different venue today. But CPI, is it dead yet? I don't think inflation is dead yet, but we're moving in the right direction. I think the key number this morning was 0.3, the month-to-month change in core CPI. That rounded up to 0.3, so it was actually unrounded. It was like 0.28. That implies in our, quick math, something like a 0.2 reading on the Fed's preferred gauge of inflation, the core PCE, which we'll get later this month. So 0.2% on core PCE is roughly consistent with the Fed's inflation target. So I think this does keep the Fed on track to cut again at the December meeting. That's the key takeaway from the report for me.
There's been debate about rate cuts and how they may slow in the coming months, possibly to every other meeting pace starting in 2025. We've also had some commentary from Fed officials this week, like Neil Kashkari, talking about how high productivity points to higher neutral level. Before they were thinking it was around 3%, now could potentially be higher than that, just given that they're waiting on what potential fiscal policy will come out of Washington over the next year. Where do you view the pace of rate cuts in the coming months?
Yeah, we see another one in December, as I said, and then I do think they slow the pace of cuts in 2025. So maybe they go to once per quarter. So you get 4 over the balance of 2025. And yeah, I mean, as you get closer to the range where you think neutral is, that maybe you can slow down as you approach the station, something like that. It's really hard to say where neutral is. Our guess is somewhere around 3.5%. I think that's a good bet at this point. Maybe a bit lower. We'll have to see. That is notably higher than we would have told you pre-COVID. So we probably would have been around 2.5% at that time. So I think you can make a good argument that it's a little bit higher, but I think you could also argue that nobody actually knows with any degree of certainty. So we'll have to see.
Jeffrey, we're going to get retail sales on Friday. A, what are you looking for there? And B, what's your sense of the consumer out there?
I continue to be excited, elated. I mean, the strength of the consumer, it's holding up very nicely, Paul, through all the data that we've seen thus far this year. For us at Payton and Regal, the most important data point is aggregate consumer income. I mentioned that probably 100 times on this program. It's still growing, Paul, 5% in nominal terms, 5% year on year as of the latest set of data. That's important because when the U.S. consumer has income, they tend to spend, and that keeps GDP going, and that's what we've been seeing. So I think you'll see that reflected in retail sales. The only caveat that I always give the clients is that retail sales is really mostly goods, and so it's a subset of overall consumer spending. So don't get too fixated on any one month of retail sales. We think the U.S. consumer is in solid shape.
Looking at the GDP Now model for the fourth quarter, I know it can be volatile, but so far it's around 2.5% growth there. And obviously we're going to have more earnings that are geared toward the consumer next week, including Walmart here. When it comes to more of the crucial holiday quarter, which usually is the gangbuster quarter that powers consumer spending and more than 2/3 of GDP growth, how are you viewing the final months of the year?
Yeah, I've been pretty upbeat on our U.S. GDP call all year relative to consensus. Right now, we think Q4 to Q4 for 2024, GDP is going to be about 2.4%. And if the fourth quarter comes in, as you say, as that nowcast implies, there's potentially some upside risk even to our optimistic take. So that's very good news, especially if you go back to, I don't know, this time last year, a lot of prognosticators, a lot of investors were saying that a recession was inevitable, that given the fact that the Fed had hiked as much as they had, that with a lag, we were going to see a downturn. And we just really haven't. The consumers remain resilient, and GDP growth looks great. So I think for me, what's the moral of the story here? We have a situation that we've had maybe 5 times in the last 3 or 4 decades where the Fed is cutting rates, so becoming less restrictive, and the economy is still growing at a pretty good clip. When those two things are moving in the right direction, it's good for risk assets. So, equities, large cap, small cap, whatever you want, U.S. equities, but also credit sectors in the bond market. We have a very good high yield strategy. I think that will continue to do very well given the GDP backdrop and the Federal Reserve's actions.
All right, Jeffrey, thank you so much for joining us. By the way, go to the Royal Arms Pub, Bank Street, mention my name. They will take good care of you. Jeffrey Cleveland, Chief Economist, Payton & Regal. He's over there in London seeing clients and doing the good work there.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Let's head back down to Washington, D.C. Laura Davison joins us. She's a politics editor for Bloomberg News down in Washington. Laura, a lot to cover here. President-elect Trump in Washington speaking to lawmakers earlier today. What's the feeling in D.C. as to we start getting more and more information on some of his cabinet picks, on some of the people he's appointing to special positions, whether it's Elon Musk or, in these czar-type positions? What's the feeling in D.C. this morning?
So there's certainly been a couple surprises. Late last night, there was a pick for the Department of Defense, Peter Hegseth, who is a Fox News personality. He does have a military background, but this one raised a lot of eyebrows around the world of people having to actually Google and figure out who is this guy. So that was one of the surprises. We also see some other key loyalists going into other national security posts, someone like John Ratcliffe, who was the Director of National Intelligence. During Trump's first term, he will take on to lead the CIA. Of course, earlier in the week, we saw Kristi Noem installed at DHS, and also Tom Homan, who will be in one of those czar positions at the White House overseeing immigration and sort of these mass deportations that Trump has talked about. So where we've seen these appointments go is where you can kind of get a sense of what Trump wants to do in his early days. So immigration is going to be high on that list, national security, but also this new, what they're calling DOGE, or the Department of Government Efficiencies. Of course, this is the sort of position that Elon Musk has dreamed up for himself. Vivek Ramaswamy will be joining him there. This is not an actual, cabinet job. This isn't an actual department, sort of a presidential commission, which means its powers and scope will be more limited. But we can expect that we'll see Elon Musk around. He's actually today with Trump in Washington. He was at a meeting with House Republicans just a couple hours ago.
And I'm glad you brought up Vivek Ramaswamy, who's also supposed to co-lead that new Department of Government Efficiency, because he said in a post on X this morning that a federal government needs a massive downsizing. What type of influence do you think he could wield on the president?
So far, his influence has been massive. He's been at Mar-a-Lago helping make some of these key picks. He's been joining phone calls with foreign leaders. Musk himself says he thinks he can cut about $2 trillion from the federal budget. It's unclear if he wants to do that in 1 year or spread over a longer period. But $2 trillion is a massive amount. That would basically be sort of all of the government spending, that isn't, Medicare, Medicaid, some of those entitlement programs, financing the debt, those sorts of things. So this is a really big task that he wants to do, but he'll probably find it's a little bit more difficult than what he did at Twitter, for example. You can't just kind of come in and start firing people. This is the federal government, so there are more rules and regulations and guardrails in check.
Okay, from that big picture topic to another one. Deportations. Is there any plan coalescing around what the scope of those might look like, how they might actually get it done?
So far, not much, but there's a lot of questions about logistically what this will look like and who is going to pay for this. Trump has said he wants to deport somewhere between 15 and 20 million people. There is some money and some things that the agencies like Department of Homeland Security could start doing, but it is very likely that they're going to need money from Congress to really get this off the ground. Of course, Congress is looking like it will be held in Republican hands, but still, government spending, in many cases needs 60 votes in the Senate. They might be able to get it by with just 50, meaning they could do it with just Republicans, but spending a lot of money. And Trump has said he wants to spend as much money as it'll take. That's going to be probably one of the first policy fights we see play out in Washington post January 20th.
Laura Davison, thank you so much for joining us. Laura Davison, she's a politics editor for Bloomberg News from Washington, D.C.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Jess Menton, she's sitting in for Alex Steele. Alex will be back Monday, which is the good news. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. So head over to youtube.com, search Bloomberg Podcast, and that's where you will find us. Lots of political discussion this hour. Again, President-elect Trump in Washington, D.C., meeting with President Biden in the White House. We got I guess a minute or so of some sound from those two, but hopefully...
That's right. It was brief. But they did do this.
Yeah, presumably they're meeting behind closed doors and getting things done here. Henrietta Trez joins us. She is Managing Partner and Director of Economic Policy at Veda Partners. Henrietta, what do you make of the last, I guess, 8 days from last Tuesday? You know, with some perspective here, what happened?
Well, I think some of the most exciting things to happen is coming out from my conversations with folks on the Trump transition team as they're trying to staff up. Really enjoying this sort of parlor game of who's going to be nominated in which key positions. I think there is a lot of enthusiasm and anticipation around who might be the next Treasury Secretary. That's where a lot of our clients are focused. A lot of conversation around what the role for former Ambassador Lighthizer might be as a new trade czar. There's really just sort of this ebullient feel of, you know, now we get to really put into effect all of the things that the Trump campaign hoped they'd be able to do. Obviously optimistic and enthusiastic about the fact that they got the House at long last declared in their favor. So just a lot of enthusiasm and excitement is what I'm getting out of the Trump camp today.
Henrietta, of course, there are a lot of questions about tax as well as trade policies. When you're speaking with your clients, who do they feel like would be best to lead the Treasury Department?
Best is a relative term. I think if it came to Bob Lighthizer, for whatever reason, he has made pretty clear that he wants that role. I think the market would respond very negatively to that. He's obviously very supportive of tariffs and extraordinarily competent, as we saw from the Section 301 tariff and the trade war with the U.S. and China. That's something that they would very much anticipate if he came in at Treasury, which is, you know, on the street, the most important and powerful position in the entire administration. So I think that if Bob Lighthizer were to be Treasury Secretary, there would be a lot of trepidation and anxiety on the street. For Scott Bessent, who has been making the rounds for months now on Wall Street, there is an understanding that he would prefer sort of a gradual approach to tariffs, but it still raises a lot of eyebrows when you hear him say directly, I think that every month tariffs should increase 5%. Those are, of course, tariffs that are passed directly onto the U.S. consumer. So there's really a lot of anxiety around tariffs in general. There's also a lot of attention around this idea that Elon Musk, with his potential new commission, could trim $2 trillion in federal spending over the next 4 years. That's a non-starter. That's not how governing via the appropriations process works. That requires 60 votes in the Senate and 218 in the House, neither of which are going to be achievable. So there is a lot of focus there just on understanding the realm of the possible. But obviously this is an ex-official committee, and Congress generally doesn't cotton to outside committees of unelected officials.
Henrietta, with a little bit of hindsight here, and given what we know with the House, how much of a red wave is this election season?
Well, the House is definitely a huge problem, especially since, as you just mentioned, Trump is taking at least 2 of the House members with him to the White House. So based on the numbers that we have right now, the majority for the Republicans in the House is going to be even smaller than it was this last cycle. I think 2, 3, 4 seats is what we're looking at this point. So governing is going to be incredibly difficult, and they have some really heavy lifts to tackle. One of the things that we're focused on a lot right now is how much can they do on the tariff front in terms of collecting revenue in from tariffs and factoring that into the tax bill. It's worth remembering that Congress has not legislated on tariffs in 80 years. And there's a reason for that. It's really difficult. It leads to material ramifications and trade wars with not just China, but also retaliation from the EU and other nations that we impose tariffs on. By actually voting on tariffs, that puts House members in particular in a unique position to be railed against by their voters in the upcoming midterm elections. So there's going to be a really hard road ahead to pull a tax bill together just in general. And once you, or if you do add tariffs to the equation, it becomes even more difficult. With scant majorities of 2, 3, 4 seats, you're really going to struggle on that one.
What about when it comes to the debt ceiling? Because a lot of this won't transition until early next year. So when you're coming up against potential deadlines around the holidays, how could this shape out?
Yeah, so I think early discussion that I've had with Republican Senate staff in particular is that they would join the debt ceiling with the tax bill. That has some advantages and some disadvantages. The biggest advantage is that it gives you a deadline of probably July of next year to pass the tax bill. If you combine the two of those issues together, you can pass a bill via reconciliation that does not require any Democratic votes. So Republicans can forego any negotiations with Democrats and pass a debt ceiling bill on their own terms. That is, of course, something that House Republicans have not acted to do in almost 2 decades. They have perpetually relied on majority support for debt ceiling hikes and appropriations bills from the Democratic conference, even when they're in the minority. We've seen that play out repeatedly in the last couple of years. So I think the debt ceiling potentially riding along with the tax bill has the advantage of making the tax bill an urgent must-pass thing much earlier in the year than otherwise would be achievable, July versus December. But it is a very heavy political lift. And to do the debt ceiling via reconciliation, you must increase an authorization by a specific dollar figure. You cannot suspend it through, May 2028. You have to provide a $1.5–2 trillion debt ceiling hike specifically, and that will equate to a debt ceiling of $35 trillion, which is a very hard vote for, in particular, Republican members of the House to take.
Henrietta, my civics is a little rusty here. Remind us, how do we replace a member of the House or the Senate that joins an administration? How does that happen?
It's different for every state. They have different rules around when it has to be achieved, whether there's a special election. It depends how close you are to the election. But in general, it's up to the state and the local governing officials in that state at the governor's level to pick a replacement in the interim. They will also call special elections. That's going to be in each state's bylaws.
That's interesting. So as far as what that means moving forward, what's the timetable on when those seats would be filled?
Well, they're going to want to get them filled as fast as possible, particularly in states where there's going to be a Republican replacement. I think the easiest way to look at this is probably from the United States Senate standpoint, because so many senators are likely to go up to the administration, not just J.D. Vance, who's obviously now the vice president elect, but also a whole host of senators like Marco Rubio, potentially Tom Cotton, Bill Hagerty, Marsha Blackburn. Every one of those state officials who's in a position to replace or with a special interim appointment a senator is going to be in a position to do that. So whether that's maybe Ron DeSantis, the speculation right now is that Laura Trump is in the offing to replace Rubio. Those are going to be things that they want to do quickly, because even on the Senate side, you only have 53-seat majority for Republicans. If they lose a whole host of members that go probably in January and February up to the White House when they get confirmed, you're going to need those replacements immediately. Otherwise, you won't have functional majorities. So they're going to all do that very quickly on the House side in particular.
So Henrietta, given what we know about the makeup of both houses of Congress, what do you think is on the to-do list for Congress in 2025?
Well, we're going to get through the lame duck session here. We're going to do an emergency spending bill for the hurricanes, Helene and Milton. There's still got to be an NDAA. There's still a farm bill component. There's going to be efforts to pass a very small focused tax bill, providing tax incentives for home rebuilding after disasters. But into next year, you should expect Congress to do really the two things that they have to do, which is the debt ceiling and a tax bill. And then beyond that, very little. It's very much going to be focused on the appropriations process, which, as I mentioned, does not leave room for cutting federal spending, because you're going to have to get 10 to 20 Democrats in the Senate and maybe as many as 80 to 100 in the House. So it's going to be pass a debt ceiling, pass a tax bill, and then just work on a bipartisan way to keep the government open for the rest of the last 3 years of the Trump term. It's effectively a repeat of what we saw from his first term. Tax in the first year, and then trade for the next 3 years after that. In this case, I think tariffs will start almost immediately, but that's not going to be up to Congress. That's going to be up to Ambassador Lighthizer, who will be sort of a trade czar per the current conversation. And then Congress will do the backbreaking work of passing a budget, passing appropriations bills, hiking the debt ceiling and the tax bill. And I suspect that's largely it.
All right, Henrietta, thank you so much for joining us. We always learn so much speaking with you. Henrietta Trez, Managing Partner, Director of Economic Policy for Veda Partners.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Jess Menton sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast. All right, Jess, I'm looking at the Mortgage Bankers Association 30-year fixed contract for mortgages. 6.86%. Dude, we were at 6% recently. I thought I was going to refi the mortgage on the Jersey Shore.
You haven't been able to do that yet.
Not happening. I don't know what's going on.
Alex Steele is able to get a great rate
right
before
2.75%. She's never, ever moving. We love talking real estate here, both commercial real estate and residential real estate, and we can do that today with some good folks. Bess Friedman, Chief Executive Officer for Brown, Harris, Stevens, and Abigail Doolittle, Chief Market Strategist, our correspondent for Bloomberg News, both of them joining us here in our Bloomberg Interactive Broker studio. Bess, talk to us just about, let's start with New York City. How's the New York residential real estate market these days?
You know, the New York City market has been challenged lately. The last few years, I would say 2, have been slower than usual. Volume is down. And I think inflation is a part of that. And obviously rates that, topped nearly 8% for a 30-year. They have slowly been coming down. Inflation's been coming down. But it's, all the stuff that's been going on in the economy has kind of created this challenged housing market.
And I know you also are looking at New York, Connecticut, New Jersey, as well as Florida. Where do you see different divergences between if you're looking more in the South versus where you're looking in the Northeast?
The challenge in the South is more one of inventory. So we lack inventory there, and anything that comes on, it moves pretty quickly. And places like Connecticut, where we have offices, same thing. And people, as Paul had said, don't want to put their homes on the market because they locked in such a low rate. So we're kind of doing this dance with buyers and sellers, and that's starting to come apart a little bit now. And we're hoping to get more fluidness as we move into 2025.
So last week, we, of course, had a little bit of news in this country, the election of Donald Trump. And I've been dying to ask different real estate people, and you happen to be the first. What do you think the impact of his potential administration, just right now, there's so many different asset classes outside of real estate that are moving, and then his actual administration, there's this expectation of inflation. Even though his last administration didn't have that inflation, are you hearing or feeling what might be ahead for real estate based on the new administration coming in?
I mean, the one thing that Trump mentioned was that he was going to remove the cap for the SALT deduction, which he actually put in place in 2017, so that could be a good thing. But I think we're open to collaborate and create a good environment. As you probably know, there is something passing in City Council today that will be deeply damaging, we believe, to the real estate industry. So we're hoping to be able to collaborate, work together, and I hope that Trump coming into office doesn't push this far left agenda further left, because that would create more problems for us.
Well, so talking about what is the vote today, the FAIR Act, my understanding on it is essentially to eradicate broker fees for renters, and the stated purpose is to lower moving costs for those renters. At some point, though, as somebody who has, and still am a renter, it always gets passed along at some point. What is your view on this? It sounds as though you're not necessarily so favorable, but it's not as though brokers are going to not take fees.
No, of course. And what you said, I mean, you're not in the real estate industry per se, but you get it. What's going to happen is that landlords are going to have to raise rent, and there will be unintended consequences to this legislation that the City Council just refuses to take into account. We've had discussions. We testified there. A whole bunch of people, landlords, people from the industry. We talked to them. We expected collaboration. And instead of that, a few weeks ago, they basically jammed this legislation down our throats without any discussion. And I think that is creating the challenges, because without discussion, collaboration, and creating responsible legislation, you're going to ostracize communities, and you're going to actually hurt the people you're trying to protect, which is they're missing the point.
So I also rent, and
65% of New Yorkers do,
Yeah.
because that's a big part of the market.
I somehow was able to get a rent-stabilized apartment, so I feel like I'll probably end up dying there because I'm not going to want to give it up. But I mean, it's just so expensive to try to find other options, especially even when you're trying to rent. So when you had so many people leave New York right during COVID, but then so many people come back, I mean, what do you do with the kind of conundrum when it comes to rent prices?
I mean, that's the challenge. The market sort of sorts that out, and real estate professionals work with renters, they work with landlords, they work with everybody. So I think you want to work with your community. Look, the city council doesn't have a monopoly on caring about their community. We all care about our community, and working together is the best way to get things done. So listen, rental prices are a challenge. I get it. It's an expensive city. New York is so is Boston. Many places are. But that's about the market, and that's how things sort of sort themselves out.
Where do you think 30-year mortgage rates need to go to before the marginal seller will come onto the market and say, okay, now it's not so bad, the cost for me to move here? What do you think that is? It below 6%, below 5%? I don't know.
I mean, the below 6 is what we hear is like where people feel comfortable.
Okay.
Again, mortgage rates are still historically low.
Yeah.
Remember, they were before my time in this business or anything, they were in the double digits. So a 6% 30-year, and you know what? You can refinance if rates, dip further. So that's what I've heard, is that if they dip below 6, people are getting into the market. And so
Paul's
I
watching
think
that.
it sounds like everybody's watching that, because
Yeah.
I think 60% of people who own homes have mortgages. So it has a big impact.
One thought that comes to mind in terms of this FAIR Act, if it is passed, I think that the average price for a one-bedroom doorman apartment here in Manhattan is more than $4,000, maybe $4,200 or something like that. So if all of a sudden that 5 to 12% fee gets passed along through rent, are we going to see the average rent in New York a year from now be, like closer to $5,000 or something like that?
I mean, I think that's what the impact of something like this would be.
Wow.
Because, landlords sometimes pay the fee, sometimes they don't. If you look on aggregator sites, 50% of the time, roughly, they pay the fee, and 50% of the time they don't. And so this is sort of burdening them with that. And then there's a lack of transparency, because consumers aren't going to know what's available, because agents won't be marketing and posting the floor plan and the photos, so you're not going to know what's out there. It's not a good way to go about doing business.
Yet it's being signed in today.
It's being signed in today. The mayor has spoken about it. He's been vocal. He believes, obviously, they have good intentions, as we all should proceed like that, but he thinks it will have a negative impact. He's been encouraging them to reconsider it.
Bess Friedman, thank you so much for joining us. Bess Friedman, she's the Chief Executive Officer of Brown, Harris, Stevens, and Abigail Doolittle, Chief Markets Correspondent for Bloomberg News, joining us here in our Bloomberg Interactive Broker Studio.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Jess Menton sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. One of the more fascinating things to come out of President-elect Trump's election is the role of Elon Musk.
The world's wealthiest individual.
Apparently, he's been with the president ever since the election. Joe Matthew was just reporting he's in D.C. today.
He was in Mar-a-Lago before.
Yep, exactly. Fascinating story developing. So guess what? Our big take people on top of
Always.
it. As always, Max Chaffin joins us, senior reporter for Bloomberg Business Week. Max, you've got a story out here. Elon Musk has a new project to run Donald Trump's government. What do we know about his role here?
Well, yesterday, we learned a little bit more just after this story was published. Donald Trump made something official that he had teased and that Elon Musk had teased repeatedly on the campaign trail. Elon Musk will be the person charged with providing advice on the streamlining of government. Now, that could mean any number of things. It could mean, I think, very little. It could also mean that as Donald Trump prepares to enact his, very ambitious agenda, that Elon Musk will be at his side. And that'll be my bet. I think the job thing is probably a distraction. The most important question in the Trump White House is who has Trump's ear. And right now, That's Elon Musk. And I think as we put together this story and as I've been thinking about this, Elon Musk throws him into these companies. And famously, he has 6 different companies, Tesla and SpaceX, his car company and rocket company being the big ones. I think we need to start thinking about politics, and in particular, Elon Musk's role in right-wing politics, whether it's the next Trump administration, or even beyond that, as his other big company, as something that he is going to be devoting a lot of time to and trying to use it, frankly, to benefit his other interests.
We were just chatting with Joe Matthew about this, and so we were discussing about how by leading a commission specifically outside of government, Elon Musk doesn't have to divest his personal financial holdings when making recommendations to the White House on federal spending and regulations that he wants to cut. I mean, what sort of precedents do we have for something that's created that's supposed to be specifically outside government, and what power can he yield and not yield? Do we have any indications on that?
There have been lots of presidential commissions. This kind of thing is not necessarily anything new. It's really just a question of how closely is Donald Trump listening to it. And when Elon Musk, he suggested all kinds of very radical things that are likely to be either difficult to achieve, like practically working within the confines of government, or wildly unpopular, or both. So, he suggested, for instance, that he's going to Twitter the U.S. government, suggesting, massive layoffs. Remember, he laid off 80% of the Twitter staff. He is not going to lay off 80% of the U.S. government. I think that would be a very, very, very surprising thing if it were to happen. That said, Trump is going to try to defund aspects of the government, and it really seems like Elon Musk is going to play a role in deciding what gets defunded, which is, of course, is going to raise all sorts of ethical concerns and questions. And because there are ways that President-elect Trump is going to be in a position to, say, squash investigations into Elon Musk companies, or direct funds to Elon Musk companies, or slow down some of Elon Musk's competitors. And so, it's going to keep journalists busy. I'm sure that the left is going to be very focused on this over the next couple of years, because Elon Musk, who's a polarizing guy, is going to be tied to this administration very closely.
I mean, Elon Musk, you cited in your article and you just mentioned here, all the companies he runs, Tesla, SpaceX, Neuralink, on and on and on. How many hours in a day does this guy have? I mean,
you haven't even mentioned his video games.
When you think about how many companies he owns, too.
Yes, he plays a lot of video games, which, is one of the many head scratchers with this extraordinary man. I think we've seen investors in some of these other companies get concerned. And, right now we're in the middle of this kind of honeymoon phase. There's a mania to the way Elon Musk is talking about this stuff. He's at the he's in Mar-a-Lago. He's in Washington now. Trump family members are referring to him as Uncle Elon. You got to think that this is not going to last. And if it were to last, that there would be a bit of a come down, because as you say, Tesla is a big, complicated company with lots of challenges. And right now we're seeing a lot of investors bid up the stock, but there isn't a ton of, it's not like there's a clear rationale for why Tesla is suddenly worth like 40% more than it was before the election, except that, hey, maybe Trump's going to make things better. But there are going to be challenges, and distraction is going to be something that we're going to be looking at.
And what about EV policies? Because it seemed like they were more beneficial toward Tesla maybe under the Biden administration rather than the prior Trump administration. So how does this sort of shift, and when you have kind of the Trump 2.0 coming in?
I mean, this is one of the things that's so strange, because Elon Musk became much more conservative during the Biden years, but the Biden years were incredibly good to Tesla. Tesla's value, shot way up. It went from being kind of a niche player to one of the large American car companies. And, Trump, as you kind of hint, was very critical about electric vehicles on the campaign trail. Now, there are two things here that are probably worth bringing up. One is, where Tesla is now is very different than it was 4 or 5 years ago. And you could make an argument that these electric vehicle subsidies actually do more for Tesla's competitors than they do for Tesla itself. So, if you were to remove all these subsidies, yes, it might cost Tesla investors money, but it would also sort of help Tesla lock in its very, very dominant position in the market. And the second thing, probably the more important thing, is that Elon Musk is desperately trying to move beyond the auto business. He wants Tesla to be an AI company. He wants to have robo-taxis. There is no regulatory regime there. And I think what investors are hoping, and again, I don't know that they have much sort of clear factual basis for this hope, but this is the rationale that Trump will basically legalize this business, that he will take a very dicey regulatory situation and make it less dicey, and that will be worth a lot of money to Tesla and ultimately to its shareholders. 30 seconds left, Max. How much time do we think Elon Musk is going to allocate to the government stuff? Well, right now it seems like it's a full-time job, right? I mean, he seems to be there quite a lot. I think this is going to be something that he's very, very focused on, probably as long as it lasts, which maybe that's only going to be a couple of months. Maybe it's going to be longer. He has signaled that he wants to play in politics beyond this, beyond 2024. He's talking about the midterms already. So we'll see. All right, very good. Max Chafkin, really appreciate it. Max Chafkin, he's senior reporter, Bloomberg Business Week in our Bloomberg Interactive Broker Studio. He's got the big take story this week, and you can read that story on the Bloomberg and at Bloomberg.com/Big Take. We're big fans of the Big Take stories.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.